All right, good morning. It is 7:19 in the morning, currently August 12th, Wednesday. Um, Here we are. We're doing a top-down analysis on the 4-minute time frame here. Let's look up here to the top left. We're on the 4-hour time frame. That means each candle takes 4 hours to print. Okay, so on and so forth. You keep going down. You got the 2 hour, the 1 hour, 30 minute, 15, 5, even all the way down to the 1 minute. Okay, so it's a picture within a picture. Okay, this is the basics of trading. I'm just gonna break it down really quick before volume hits around 7:38ish. Okay, really quick. Here's the strategy. Okay, this is very, very, very simple. It's not rocket science. What's really hard is coming into trading with a gambling mindset and not knowing what you're doing. Okay, or not having the discipline to follow a system. Okay, and if you're impulsive and want to be inside of a trade, impulsivity is not good. It's good when you know when to use it, if that makes sense. Okay, you should always be reactive to the market regarding or using your strategy, not reactive as in, oh, I just want to be in and I'm going to hit buy or sell, okay, because I think that it's going to go up or down. Okay, so it's more of fuck what you think and trade what you see. That's it, period, point blank. So here we have an uptrend, right? This is called market structure. Okay, and this is how these markets move. Okay, so you have a high, right, and then you have a higher high, which is up here, and then a trend continuation is where it goes to go up again and create another high, like just like this. So they look like little mountain tops. Okay, so this is for the beginner. I like to call it a mountain, just so you guys can get a reference of how it curves at the top here. It's got a little curve. Okay, call it a mountain. Let's get rid of this here. Okay, so the first step that we need is a break of structure, and that's literally what happens here. Okay, this arrow here surpassing the mountain is a break of structure because it goes past. Okay, that's step one. Let's put this on the screen here. Step one would be a break of structure, and step two would be a zone tap. Where did that go? Oops. Step one would be a break of structure, and step two would be a zone tap. It's that simple. Okay, zone tap. We need to wait for it to pull back. Okay, so just like the ocean, you have the wave that comes to the edge or the surface of the sand, right? It pushes and then it comes back and then does it again. Okay, so the same thing with trading. You have an impulse and then a pullback, an impulse and a pullback. So every surfer knows that they have to wait for a specific time to catch a wave, right? And that's like right when it pulls back and then they can catch it, right? So this is what we do. We wait for the pullback. We get in at a specific area, and we'll go over that in a second. We go over that in a specific area, and then we take it all the way up. So this is called a trend continuation, right? Trend continuation. If it's going to continue, you should be able to get back in right here. You should be able to get in right here every time inside of the zone. Okay, this zone actually saves us from losses. Okay, losses will keep us, this box will keep us from losses. Because if price wants to hold in this specific area, it will hold, and then we use some extra confirmation inside of this box to take it all the way up. Okay, so breakup structure, zone tap, and then entry. Okay, there's different entry models. There's 2 entry models, maybe 3. So you can enter aggressively. That's as soon as it touches the box. Okay, immediately, right when it touches, you can just hit enter. Okay, you can just hit buy. Or you can wait for a break of the candle. Okay, I love to wait for confirmation inside of the box. It saves my ass. Okay, and now any strategy that you use in trading, it's not 100%. You're not gonna win every single fucking time. But I can tell you right now that this has a 75 to 80% win rate for me. Okay, so you always have to prepare for losses. Never size in your whole fucking account. If you had $1,000, you're not going to be betting 500 per trade. Then you only have 2 opportunities. Okay, you want to divide that by 20. Okay, there's 20 trading days in a month. Beautiful. Okay, that's all you need. Get your capital size and divide that by 20. Okay. Anyways, we're going off track here. So yeah, that's it. Step 1 would be a breakup structure, pull back, boom, zone tap. Okay. So let's use some actual examples here. Let's do this one here. Okay. And if you have a hard time looking at the chart and you get too confused, really quick, I just want to show you guys something. Okay. Look at this line chart. It's already drawn out for you. Okay. As soon as you see that curve, okay, and then it passes up the previous mountaintop, okay, well, that's a breakup structure. Okay, if you can't tell, boop, boop, boom, that's pretty much the pattern. Breakup structures right here. Boop. Okay, it's very, 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 very simple. It's not math. It's literally just looking at clouds. Like, what do you see? What do you see? Okay, so this is a breakup structure here. This is on a 4-hour time frame, though. We do not trade on a 4-hour time frame. Each candle will be taking 4 hours. Even though you can catch the most biggest setups. Like, holy shit, let's do this. Yeah, you could be making thousands. Oh my god. It's absolutely insane swing trading, because you can make tremendous amounts holding trades for hours. Okay, let's go on the 15-minute really quick. Let's go. Boop. Okay. Let's go back here. Let's use a demand setup. Alright, demand is when you're buying. Okay. Let's go. Let's go to the 5-minute. Okay. So there's some beautiful setups here that I seen yesterday when I was at the gym. Let's do, where is that setup? There's beautiful setups the other day. Just yesterday too. It was at like 1 in the morning. Dude, where was it? Okay, so right here. We'll use this one for an example. Okay. This one right here. All right. So say if we weren't even here yet, right? We're like right here. Okay. This is all we can see. Okay. This black candle here. This one specifically. See these 3 blue candles? They just broke the structure. Okay. You see that? Now I'm just gonna put a line right in the center of that. Boom, right there. You see how it clearly just broke? Let's go to the line chart. Boom. On the line chart, they look equal, but on the candlestick chart, it actually broke above. Okay. So what did it do? It pulls back into the zone, taps into the zone. Okay. And it held itself up. You know, created a support, right? There's also support and resistance trading. It's all the same shit. There's one truth to it all. But supply and demand is real specific because it'll come back and touch a zone. Usually support and resistance, you get stopped out right away. People take breakout trades right up in here, and then guess what? It pulls back and it hits your stop loss. So that's why I love supply and demand. Let's not get off track here. So the zone held up, okay? It held up as support. Okay, broke structure, zone tap, okay, break of the candle. Very, very, very simple. Break of the candle would have been right up in here. So usually we keep our stop loss down here, below the zone. Okay, we'll go over why we keep our stop loss here. We keep our stop loss below the zone. And a break of the candle entry, right? So this black one here was the first one to touch. This blue one here was about to break. That's actually where I would have entered. Okay, and then boom, take it all the way up to the next high, or you can look at the 15-minute, see if there's any highs to target. Because remember, the market is continuously targeting other highs, right? It's breaking highs. So you want to aim for the next high because it's going to break. It's trend continuation. So you want to aim for something. Right, so the next high would be up here. Boom. This is a high here, right? Come over here, see the line chart. Look at that. Line chart shows you right there. Boom. So that's something to aim for. Look at this. Boom. Oh my god, 137. You don't need to aim that high every time. Just do a 1 to 2. This is all you need. This is really all you need. So you drag it up until it says 2. So 1 to 2. That would be a 1 to 2. Risking $50 to make $100. I don't know, that would be a 1 to 1. Risking 50 to make 150. And yeah. Boom. You see how that skyrocketed? This was overnight, so this was a very slow session. As you can see, there's very, very small candles here. Not enough volume. But that's just an example. Okay. And yeah. That's all I have to show you for right now.